Welcome aboard, traders, to a new session of charting across the board. Today, Monday, the 28th, currently 10:30, a little past 10:32, the first hour of the trading session for the New York session. The initial balance is here. I wanted to start earlier at the starting of the session, 9:30, for the New York session once again. However, running a little behind. Here we are trying to present some arguments on the price action for the S&P 500, currently in a long. However, I'm going to explain that I'm trading the minor time frames for the futures trading on Apex. This is an account connected to Trade-of-8 on Apex, correct? Therefore, I'm taking trades also along the way the macro. But again, I'm trying to capitalize as much as I can, as previously already mentioned, and therefore here we are in a long position. I'm in a personal long position here for the S&P 500 on the minor time frames. These are only short-term trades, minor ones, okay? So do not confuse between the macro and the micro, okay? On the macro, to start very briefly here to give a context for new traders or new members who are joining in and do not know the context of our projection. On the main projection, the weekly, the monthly time frame, previously introduced during the December 2022 lows, okay, major cycle lows. Back then, we reached this projection that took nearly 3 years on the macro. Once again, 61, 62, 63.55 was the overspill level of this this ABCD structure, a reciprocal ratio at the 6300. Currently, we're above those levels. However, I'm adapting new information as time progresses. It is hard to make such a projection within 3 years. However, we're slightly higher than those levels. Important to also know that after reaching the completion point of this pattern, what we perceived previously in April, during April lows, was a major decline. A 22% on the S&P decline, the S&P 500, or the NASDAQ, I believe, got nearly 30%, or the Russell, one of those indices. However, we have a significant decline, a rapid recovery, and since then, we're now back above these levels. But again, the major macro projection, okay, was from the lows of December 2022, October 2022, December, the end of the year, to go higher. And once reaching these levels, of course, we have executed positions along the wave, longs and shorts, favoring the upward trajectory back then. Now, of course, we adapt to new information, and therefore, I am moving accordingly into minor time frames since we already encountered the first rejection. Now the idea is, how much higher can we go from those levels? Are the 6400 on the S&P only an overspill, an upthrust of this previous projection from December of 2022? And if so, these are now the true levels where, in my opinion, after a retest, okay, to recap here, I don't want to miss this trade here quickly. I would like to I would like to go over these details on the trade also very briefly. There is a lower high, a lower low on the previous low on the 15-minute time frame. Also a higher low on the RSI. Also previous structure resistance where the gap was presented on the Friday session before opening higher yesterday on futures, and now we're closing that gap. Gaps are open windows, as Steve Nissen suggests in his book on the Japanese candlestick, suggesting that gaps also in sometimes they act as support or resistance. This is a very basic understanding of support and resistance, correct? If the gap is filled, then ideally there should be buyers where we indeed encounter some support, okay, on the 15-minute time frames. This doesn't change the levels on the macro, okay? On the macro, I don't want to miss this trade. I believe I'm risking here $500 to make either 700 or 1,000, at least a retest of these 64.40s, okay? Once again, this is only a minor time frame for a day trade, okay? This is why I chose the prop firms and trading with them. I have Apex on this account on Tradeovate, okay? On the other one, on my left-hand chart that you guys cannot see it, is Topstep also. So I have two accounts trading simultaneously and copy trading on Topstep. Now, to go briefly on this major projection, okay, because I am trading what I see here. If there is an opportunity on the minor time frames, then if the risk is lower, I will take those opportunities the market present to us. Here, major projection 2022, okay, only to give a brief context for those who are not familiar with our main projection. I believe it's always important to bring context. Basically, we tested those levels projections or those major projections. Apologize. When I'm gonna trade, I'm a little also in a fast pace, okay? You guys know how it feels when in a trade and also trying to do live. The monthly time frame, once again, we indeed have accomplished, okay? This is where we were in 2022. Once again, the projection was A to B equals CD with support at the 50% retracement from the lows A to the B, okay? COVID crash to the 2022 or 2021 peak. The correction where everyone and their mother was extremely bearish at these lows. And now, of course, the narrative has changed since then. Everybody is expecting higher levels only here, but completely disregarded this entire move. Okay, very important to bring that annotation into the table. Okay, so what occurred is we have the support indeed, October 2022, bottom, major peak, December. Oftentimes within the harmonic framework, okay, now also bringing some educational content, we have two types of reactions. Once a pattern completes, either an ABCD pattern or a W or an M formation, they present the first test at the completion point. This one, the 6,000 levels on the S&P were already achieved last year, okay, in December of 2024. Then, of course, some range in between up until the pivot point in February, trying to work in my accent, guys. We have the completion point, what occurred later, when everyone, of course, was projecting 7,000 here at those levels, all-time high. What occurred is a major decline, 22%, nearly 22%, 21.64. And of course, now we have the blow off top and all of that narrative. That, to me, the timing is also very important, right? We cannot keep calling in a blow off top and then omitting these major declines in the market and pretending to be right still. Once again, the difference between trading and making a projection or analysis is completely different, okay? We made our projection already. That was right, correct? But doesn't mean that we have been nailing every single move. That will be false, my friend. That's not trading. We have the correction. We favor the trend on the primary trend, in this case, based on Dow theory, once again, and of course, we move accordingly into what we see. As I said before, there has been major turning points in between. 4,500 previously was also a July turning point back in July 2023. Prior to this major correction, we were long, and then of course a short back then was presented on the previous room, okay? And so on, the same conditions pretty much presented on this upward trajectory, long, short. And once we reach these levels, I went live on Topstep also in October of last year, trying to present my arguments as to why I was trying to favor the short. Even though we have some spikes or upward traction, to me, the turning point that I was expecting for this major decline was within the region. It was coming to me, in my opinion. And indeed, we presented these major turbulences towards the downside, reaching the type 1 reaction. Once again, normally a pattern complete. This is based on the macro. However, the same interpretation can be applied on minor time frames, the 5 minutes, the 15 minutes, the hourly, the 4-hour, daily, and so on. Okay. Now, important to note here that even though we breached the previous all-time high that was already printed on December of last year, December 2024, with a range here, we pierce through. So how much higher we are from those levels, if we compute, of course, if someone would have still remained long believing the 7,000 narrative based on other analysts back then, or pseudo analysts back then, you of course encounter a nuke, 22%. And if you remain, okay, if you remain long from then, of course, you're still basically, let's compute from that previous all-time high, December, February, you are basically nearly 4%, right? That is basically the levels where the S&P 500 is currently trading if we compute the entire move from last year. Of course, there were many traders who captured this low, which is significant, is great for them, but the trend was not only coming from these levels. Of course, these are new information, okay? This could be the type 1, and now are we within the type 2? The type 2, ideally, will be a major decline that would break the previous lows of 4,800. But I'm not suggesting that will be the case. Why? Because I never know what the market will do. Even with the previous projection presented in 2022, I did not know if we were going to go to those levels for certain. What I presented then was the divergences on the weekly, on the monthly, implying that the technicals were potentially suggesting a continuation of this previous A to B, to pour a C, and then, of course, based on the harmonic ratios, the congregation of ratios, we compute potential projection. That has been the case. We're not trying to act as we know every single move in the market, because nobody does. Okay, nobody does, my friend. We act according to the information that we perceive in the chart, and then move into the perception of the market information. Okay, now going back into my trade here on the S&P 500. Reason why, okay, why I'm in a long here on the short-term trend, knowing that this might be a turning point soon, considering that on the weekly we are not overvalued yet, okay? That can be another variable or argument, confluence as to why I'm still trying the longs here on the short-term trend, okay? Only to capitalize as much as I can, as you guys already know. On the daily, we are indeed printing overvalue conditions. This is a risky long, in my opinion. Therefore, I'm not presenting other setups, personal executions only. Currently up $300, I was up 400. I could either take profit here, right? I don't have to be greedy and close this trade and be done with the day. You can repeat 300, 200, whatever that margin of expectations may be. You don't have to remain long or short for too long. Whenever you set an amount of profit that is significant to you or important, you can close a trade and repeat these actions over and over based on day trading, okay? In order to remain profitable, okay? One of the reasons I like the pro firms also is because you prove your strategy there. First, you have to pass the first step, is passing these evaluations, correct? The next one, of course, paying yourself. And of course, you can test if your strategy actually works without risking too much of your own funds, okay? It's a great opportunity, I believe, for traders who are confident in their strategy, okay? Now, to give a brief context here, I'm debating where to close or wait still. This is, once again, on the 15-minute time frames. On the macro, you guys already know we are within overvalue conditions on the daily, okay? As I mentioned before, the daily and the weekly, we're entering those periods of concern heading into August of next year, or next month, not next year. Therefore, having these variables in mind, what I'm trying to favor here is a cheap long, in my opinion, where we have divergences, okay? I'm gonna explain why I executed a long here. I already presented, I believe, the reason why we have a lower low in the price action for potentially a trend reversal within this time frame, okay? We got lower lows in the price action, higher lows in the RSI momentum indicator, potentially at least a breather of the selling pressure if the major time frames are superseding the minor time frames, meaning that if there's more selling pressure coming at these levels, we know that something larger of a bigger magnitude is unfolding on the macro, understanding that we have reached those levels of potential turning point that already occur at the first rejection, the first type 1 reaction, action reaction, correct? We tested, corrected in April lows, bounced back. Major upward trajectory for those who were able to capture the moves from April lows, okay? If you did so, congratulations, give you a pat in the back. You know when to take profit or remain long if you believe the S&P will go much higher, potentially to 10,000 or 20,000 points, okay? That seems to be a far point from here. Why? Because if you guys can observe, this move alone from December of 2022 took nearly, it's going to be 3 years in October, which, by the way, speaking of cyclical turns, October is also another important point coming here into play soon, okay? July is also very known that we have some rally in July, some decline between March and April. It has been a repeated pattern, okay? And of course, October also the major turning point. To bring October into the context here, if you guys remember the Shemitah 7 years major decline, when was that argument presented in other rooms, okay? It was at the lows, right? It was October 2022 low. September, October was the Shemitah. And then, of course, now we are somehow extremely bullish at these highs. It's intriguing how the perception changes and the market sentiment is always wrong, okay? It is what it is, okay? Regardless of being right or wrong, the key here to trade is to risk or to mitigate risk management, okay? I mentioned that I'm willing to risk $500, meaning if this goes against me, I'm willing to lose on a maximum of $500 without before stopping this trade and looking for another opportunity. In the meantime, short-term trend, long to aim potential profit-taking levels. I'm gonna explain this very easily. You guys already know the deal. Applying Fibonacci application from the highs to the lows, where common areas of retracement, the 0.382 will be my first profit-taking levels, or the first range, the 0.50 or the 0.618, okay? Where now, knowing the risk, I'm in the positive, in the plus side, with $225 so far. I can either close the trade regardless of prices going higher and secure these profits, okay, in the short-term trend. You can repeat this every single day, make $1,000 a week. That's $4,000 a month. So you can make your own arguments whether to take profit, to wait longer. That is up to your risk mitigation strategy, okay? Here, applying the harmonic structure only if these lows at the gap, okay, the gap, the open window, once again, is held as support, I can potentially start computing those harmonic ratios. We have here an X to A potentially, then to B. This is too shallow. It does not require or doesn't fill the criteria for the 0.382, the minimum retracement potentially for something like this, right? A W formation, an early identification structure if all the criteria based on harmonic ratios were to be constructed here. That's not the case, therefore that is not an option. The only argument I see here, once again, is the open window, the gap that was certainly filled, divergences to confluences for lower risk areas. So therefore, my reasoning of this execution came here based on these criteria. Lower lows, higher lows. I understand that this implies a potential turning point for a trend change on the minor time frames, once again, coming from a downtrend. But the 4-hour and the hourly, my friends, are presenting cautionary levels as well. So therefore, I'm aware that we can go lower, okay? But I wanted to give a try and at least make some profits here. The levels that you guys can observe here, also in blue, this trading range is the first opening, the first 5 minutes of the opening, known as the orb, the opening range breakout, okay? That would ideally dictate the directional trend if prices on the S&P breaks higher above the opening range, okay? The probability is to go higher, okay? If we break below the opening range, I might switch my position and trade a short. As of now, I was able to capture this long the 64.25. Therefore, I am sitting slightly comfortable, not much, right? It's only being reduced now as prices are trading either ranging or heading lower. Once again, I am trying to risk $500 to make either 700 or 1,000, right? That would be a 2-to-1 risk to reward ratio. Currently now lower, $87. But again, to me, it's all about risk mitigation, knowing that my max risk that I'm willing to lose on this trade is $500. If that happens, I then move into the next one and so on. That is all trade is about, my friends. Once again, analysis from execution differs. Completely different games, my friend. Why? Because analysis, anyone can make projections. You have no skin in the game. Now, on the execution, you're risking either the capital from the prop firms or your own capital, and therefore the approach is different. You don't care making projections. You care about managing your risk and exiting the executions that you may take, longs or shorts, okay? So I hope this is very clear, my friends. I wanted to go only briefly on this stream, presenting the arguments that I see still on the macro remains the same. Now, short-term trend, I'm willing to take short-term trades, okay? I'll let you guys know how this trade goes. If I lose or not, we'll see. But as of now, the reasoning behind is a cheap long. I probably should have taken profit, right? Should have, could have, would have. $500. Again, this is all about the interpretation of the market generated information. Now, you guys already know short-term trend. If we go back into the highs, I'm willing to take profit at the 0.382. If this trade does not stop me, okay? Maybe now instead of losing $500, I can mitigate to 250, okay? And make it lower even, okay? If there is not enough buyers jumping in at these levels. Once again, the orb, the opening range breakout, depending on where the price action, which direction the price action breaks, either below this range, okay, the orb, 64.26. If we break below, we retest as resistance. We then have potentially another short execution towards the downside. If we break above the orb at 64.32, an upward move can be perceived into the upside. This will be mainly on the 5-minute, which is a very choppy action. Okay, that can be a range here on the orb and potentially just range in between. Now I can already perceive here a form of an information based on the 1 minute. I particularly do not trade on the 1 minute. However, I do respect traders, day traders, who can manage risk, making decisions on the 1 minute, the 2 minutes, or any smaller time frames than the 1 minute, the 5 minutes even. Okay, the low I can go is 5 minutes. I not necessarily trade based on the 5 minutes, but rather the 15 minutes. This trade, once again, is based on the 15-minute time frame. Okay, right here we got a bounce. Now, can this be a retest before heading higher? We will see. Okay, now once again, on the 5 minutes, depending on where we break, I like to monitor the orb also on the 5 minutes. Only if we retest or we break below the orb, okay, at 64.26, that was the opening range, the first 5 minutes, we break below, we retest and negate as a resistance, I might change my trade. Okay, in the same manner, this can be also only a range, breaking higher later or lower. Currently breaking below. The idea here is if we break below the 5 minutes on the opening range, there should be a continuation, then a retest of this opening range at 64.26 and potentially head lower. If that were to be the case, considering that the hourly and the 4-hour time frame are suggesting cautionary levels. Okay, we will see, my friends. Extremely overvalued here on the daily. Therefore, we can retest or reset the RSI at the 50, a neutral level, and from there on, we can reassess if there is going to be a support at the support levels. Previously also noted here in the price action, you guys can observe while the RSI remains above the 50 on an uptrend, that implies support. Okay, support here, some support, recapture as support, heading higher, recapture as support, heading higher. Are we going to retest the 50 level on the RSI before heading higher, or we're going to break lower, retest as resistance and head lower? Nobody knows. We trade what we see, we mitigate the risk. Therefore, you don't have to know what's going to happen next. Rather, trade what you see, as our friend Larry Pesavento says in his book. Everyone, thank you for being here. I'm going to have to end the stream. I have other things to do. I would like ideally to finish my trade in the positive and then continue with my routine. Okay, everyone, once again, you don't have to be stuck on the screen also. That's the beauty of day trading, I believe. When you set your goals or profit taking levels, you can then move on with your days. Go to a gym, for example, or go outside, enjoy the day, be active. Do not get distracted with the charts all the time, okay? This is an opportunity for us to seek freedom, not to be stuck into a monitor for long hours. There's so much life out there to be enjoying. Everyone, I'll see you guys on the next one. I hope this trade goes at least into the 0.382, which, if that's the case, if once again, that will be a 10 to 11 points, will be around what I'm looking for. 700, 600, ideally 20 points will be $1,000 for the day. We will repeat this tomorrow and the next day and so on. Everyone, I'll see you guys on the next one. Thank you for being here. This is Marvel6. Remember to live a life with an attitude of gratitude and do not pretend to know everything. Why? Because the market at some point will always teach us an expensive lesson, as mother market like to teach us. I'll see you guys on the next one. Cheers.
Make it quick.